Well done. So today morning, right, we got a strong buy. It came all the way to the bottom. So we got the bull puts and we made nice profits with the bull puts. We took 20, 25 bull puts. When it went all the way to the top, I put the profits. And then we did a short fly. So mostly either at 1 o'clock or 1:30, price will drop all the way to the 68.30 point. Then we can take the profits on the short fly. Short hour before 1 p.m. also, if it comes all the way to the 68.30, we can book profit on it. We also did the bear call 68.55, 60, because this is where we have a huge resistance. Now T5 went all the way to the top. So either at 1 o'clock or 1:30, we'll see price coming all the way to the bottom. That is where we can take profits on the bear calls, SPX bear calls. So around 1 o'clock, if you want to take the trades, there are two ways we can do it. One is if you want to go with a low risk approach, right? For example, you buy some 20 accounts with Apex, right? Because they have a discounted price today. You get for $10, $20 each. Any account size, whether you get 150K or you get 50K, 300K, you buy it for $20. Let us say you buy 20 accounts. 10 accounts you can do, you have to use Replicanto. And then what you do is you, you use two different tabs, right? For example, you have NQ in tab 1 and then go and select another tab. You have NQ in tab 2. So here what you do is you go and select Ninja Trader and you pick one of the, right? Let us say you have Apex 1 to Apex 20. So here you will use Apex 1 as the leader account. And then you will use Apex 2, Apex 3, Apex 4 until Apex 10 as your child accounts in Replicanter. And then here you will use Ninja Trader. You will log into Ninja Trader and you will use Apex 11 as your, right, in the trading way, you will have Apex 11. So here you will have, in the trade of it, you will have Apex 1 as the leader and Apex 2 to Apex 10 as the child accounts in the Replicanter. Whereas here you will have Apex 11 as the leader account and then Apex 12 to Apex 20 as the child accounts. And then around 12:59, you can 12:59, 30 seconds or 40 seconds, you can just click on buy in one. You can go and click on sell on the other one. So either this or that, one of them will hit the target, one of them will complete the evaluation. Whereas the other one, so minimum 50% of your accounts will reach to the PA accounts. And then every day evening time, you can trade with micros or you can trade 200, $300 every day you can make on those 10 accounts. So that is one approach. If you want to take a low risk approach, minimum 50% of the accounts you can complete. So mostly we may see a drop initially. Now T5 already is getting close to the top. So mostly we may see a drop at 1 and around 1:30 we may see a bounce. So the second approach is instead of taking both the sides, you just take a, right, based on the direction. If T5 is at the top, if NQ is close to the resistance, then basically we go ahead and do a short on all the 20 accounts or all the 10, whichever you are okay to take risk. So if it goes in the same direction, right, 80% of the time it will move in the same direction, but 20% always will have a risk with the events. Suddenly the event. Mostly it will be sell the news because already it is the 25 BPS rate cut is already expected. So there is nothing surprise. So because it is already expected, it will be more like sell the news. So that's where we may see a drop. So if you just want to go and do bear calls or you want to just do short, then 80% it will drop, 20% it will bounce. So first approach, use 10 accounts on short, 10 accounts on long. Second approach, use all your 10 accounts on the short side because overall the it is looking little bearish. So we may see a drop at 1 p.m. once the news releases. Then you can book the profits whenever you see. Now it is at the top of the band. T5 is also at the top. So mostly we may see a drop initially, and then when the meeting starts, we may see a bounce again. So these are the two approaches you can use. So around 1250, 1255, we can exactly decide whether we want to go short or we want to go long. So as of now, by looking at this, mostly we may see, but yeah, by 12, for example, by 1255 already, if it drops all the way to the bottom to this or this, then we may see a bounce at 1 o'clock, and then 1:30 we may see a drop again. So that's why for now you just have the accounts ready. At 1255, we can take a decision based on where T5 is, based on where your price is close to resistance or close to support. We can decide whether to take a long or short. Within next 40-45 minutes, if price drops all the way to base level or someone to S1, then we may, if it comes all the way to the bottom, we may see a bounce. So as of now, we got 68.55, 68.60 bear calls, and also we have a iron fly for 68.30. So if there is a drop before 1 p.m. itself, if it comes all the way to 68.30 or 68.40, then we'll make nice profits on the short iron fly. Right, because we collected for a 20-point range, we collected $1,700. That means your risk is 300, your reward is 1,700. So yesterday we took 68.40, but we took profits little early. We took 400, 500, but exactly it closed at 68.40. If anyone who held a 68.50 or 68.40, you would have made huge profits. Uh, but yeah, we took quick profit, right? 400, $500 profit on each of the short flies. So today, if it comes right, it need not exactly close at 68.30, but either at 1 p.m. or 1:30 p.m. If it comes close to that 68.30 price, then we'll make nice profit, $700-800 on each contract for the short iron fly. We also took a iron condor. We went above this resistance 6900, 6920, and we went below the support and we took a iron condor. So if price stays anywhere in this range, we can keep nearly $600 for each contract. That is one more trade we took. So because we are not expecting a major minimum 1 to 1:30, there will not be a major surprise. So once that 1 o'clock news releases, if it moves in this 40-50 point range, and that we can take profits on the Iron Condor. In this CBRL, yesterday we took the bull puts, and yesterday it dropped, but today it made a nice bounce. So we'll make nice profits on the CBRL bull puts. Yeah, PG, do you have any questions? So you need to have replicant if you want to do this You definitely need to have replicanto. Then only you can copy trades into all different accounts. Without replicanto, you can only do in one account. Yes, Shiva, do you have any questions?
Yes, as per your morning alert, I opened the Apex trading for the to finish the evaluation. In the 1 o'clock, you were going to give a guidance that what to be placed the order to finish the evaluation version, correct? I just little late for 5 minutes on this meeting.
That is right here.
Okay.
Around 12:50, 12:57, 12:58, I'll tell you whether we are going to take short or long. But as I told you, there are two options. One is you can do one short, one long. In one you can use trader weight. In one you can. So even though you have trader weight accounts, because Ninja Trader bought a trader weight, so you can still use Ninja Trader and connect to your trader weight account.
I don't have an Ninja Trader because I have two trader
No,
weights
you
account.
you don't need to have Ninja Trader, right? You just click on Ninja Trader and you can just give the same your take profit trader or Apex those accounts. So you don't need to have Ninja Trader.
Okay, then I need to connect to the Ninja Trader to the
Right. If you want to do both the sides, right? If you want to take low risk and complete 50%, right? Let us say you have 20 accounts, you want to complete 10 accounts,
Hmm,
and
hmm,
you
hmm.
don't want to take any risk, right? Then you can do long on one tab and you do short on this tab, right? Here, come here at 12:59, 30 seconds, click on buy it, right? Let us say
Hmm.
you have an QRES, click buy here and go to this tab and click sell on the other tab.
Okay.
So and never 1 o'clock that news releases, if either there will be a big drop or there will be a big bounce.
Hmm, hmm.
So we can put an order like this. You go to trade, go to order tab. Let us say you go to NQ. For
Micros, right?
example,
This should be micros.
no, to complete the evaluation, we'll use minis itself. So because you want to achieve whenever that sudden move happens, that is where you want to achieve the target.
Right.
So
Okay.
for example, if you want to do a sell, you put like, for example, you have a 150K account. That means you want to do with 15 contracts.
Okay.
And then your profit should be, you want to make around, and you can go 642. So you can something like 25, 665 or something, or 662. And
Hmm.
then put 642. So you can say 598. You put some 50, 60 ticks bottom. So with 15 contracts, if suddenly there is one big red candle, you will immediately when the news release, either there will be a huge red candle or there will be a big green candle. So in one tab, you put a sell order with a take profit and stop loss. Or if you don't want, you can even ignore the stop loss.
Okay.
Just you will put the uh, reward 13,000. So for example, you want to make 9,000 target. So adjust it such that 25, 25, 600, 12,000. So 25, 610, 9,900, 25, 615, 8,025. For example, 30 points drop. If there is a 30-point drop with 15 contracts, you will make nearly 8,500.
Okay. Got it. Then yeah, maybe 30 to 35 points.
Right, yeah, around 30 points you put here. In the same way, you open the other tab. There you put buy and then you add 30 points. Whatever is the
Hmm.
current price, you add 30 points there. So instead of 605, now you will say 665 or 670. Like this, you will keep ready both of them, and you go and click on buy button in one. You go and click on sell button in one. So either
But the same account, can I use the same Apex TradeAway account, right? The morning which I opened.
no, you cannot use the same account. Right? If you use the same account, it will open and it will close in the. So if you have 10 accounts, you will
Oh,
use Apex one in this account, and then you will use Apex two in this account.
okay. But I opened only one account on the
Okay,
Apex.
if you have only one account, then you just based on whatever I say, you can take that at 12:55. I will tell you whether we want to go long. So
Okay,
as I
okay,
said, if it drops all the way to the bottom, then we'll take a buy at that time.
okay.
So if you have
Then I
only one account, then yeah, you don't need to worry. If you have 10 accounts, 20 accounts, and you want to complete 50%, that is where you go and put an order tab, and then you put 30 points up or 30 points down. Wherever you are doing a sell, then from the current price, you put 30 points down. Wherever you have a buy, you go select an Ninja Trader, and then you put a 30 points up from your target.
I need to use Ninja Trader, but I can't use the TradeAway directly from here on the trade. I already connected my TradeAway account
No, no.
here
If
for.
you have only one account, you don't have any issue. You just use
Okay,
TradeAway.
okay.
I'm talking about members who got more than multiple accounts.
Okay.
Yeah,
But Kishore,
there.
I have one more account also. Lite also I opened, but is it work now or you don't? Because I have two tradeaways, one from Lite, which I'm playing here daily, and now I just opened one account this morning as per your suggestion.
Yeah, if you have replicant, you can use copy trading. So whatever you do in this account, the same will get copied into your child accounts.
Okay. I don't have a replicant. I did not buy that. Maybe, yeah. I think it's too late. Maybe today I'll just follow your Apex, the account which I'm follow after the news I can follow.
Sure. Yeah.
Thank you.
Yeah, SPX is dropping, so the bear call we got will make nice profits. We got the
Kishore
50.
garu,
Yeah.
sorry, Andy. I have a question. I created this Apex Rhythmic account. I'm unable to
You
connect to
should
NinjaBit.
you should use only Apex Trader account, right? I told you many times. Only in
Oh,
Elite Trader Fund you have to use Trading View, but in any other prop firm you have to just use Trader. You should not
oh,
buy wealth charts or you should not buy Rhythmic.
okay.
Yeah, if you
That's
buy
fine.
Trader,
Yeah, I'll create a TradeAway account because it's only $20 today, right?
you're right.
But
Yeah.
Kishore, just now you post one vertical call. Why that is different when I select that one, open to close and sell to close, sell to open to buy, right? But this the alert which you said, open to buy and sell to close. This is some custom two-leg spread what you posted, or is a typo?
Uh,
Because usually when we select from the system,
right,
right,
right.
that means
It is, yeah, it should be sell to open, buy to open.
okay, sure, that's a typo because that makes sense. Okay.
Mm.
Because I'm trying to put, maybe I was thinking custom lag, I'm trying to do the custom lag, but still giving the same price opportunity.
Right, yeah.
Right.
But basically, we are selling 55 and buying 60
Okay.
because
Okay. Okay.
price went all the way to the top.
Anyway, I lose that because I don't know whether I can do it or not. That's the reason I did not do that. Thank you.
Right.
But that is a typo, right? I want to make sure myself correct.
Yeah, yeah, that's a typo. Yeah,
Okay, got it. Thank you.
Hey Kishore, Kalyani.
yeah, Kalyan, please go ahead.
Kishore, quick question అండి. I know you shared this elite trader funding in Ninja trading bots today, but I don't see any for the 90% of end of day drawdown accounts when I click that link.
Yeah, I think they removed the end of the day drawdown. You can use the intraday drawdown. Earlier they had end of the day,
Okay,
but
so
they have
which one is it like?
150k. 150k is a better one.
150K. Okay. That's like a 29. It's like there's like static fast track one step.
Yeah, we
Um,
have to use that. I think it is fast track.
One step has 90% off and
Right,
start
right.
to.
Yeah, yeah. We have to use the one step.
Okay. Yeah. Thank you.
PX 1655, 1660. Sure, please go ahead.
So I mean, I'm just reading. So we can use take profit trader too, right? Like
Yeah, you can
just
do
to
an
finish
evaluation.
50%.
Yeah, you can do you cannot do one pro or pro plus, but you can trade evaluation accounts.
Got it. The only thing is like I just saw some bad reviews about Apex trading. I've been doing it for a while. So I don't know. I mean, some people are
Yeah,
getting denied payouts. So
yeah, Apex is mainly for practice purpose. Minimum you, but yeah, once you gain the confidence, then you can do in take profit trader because
got it.
take profit trader is mainly. So again, if you consistently do, they won't deny the payouts. Only when you make huge payouts, that is where you have problems with Apex. But if
Got it. But
every day you make 200, 300, and then you request for a payout, there won't be any problem.
got it. Okay.
If you make huge money, then they will put something or other.
Cool. Thanks. And we're still holding ES short, right?
Yes, yeah, it should come all the way to the bottom here. That's
Okay.
where we'll book the profit. So T5 is at the top. So we should see a drop before 1 p.m. We may see it coming all the way to this. So as I said, it will be choppy today. It was just moving between R1 and S1. From S1 it went up, again came down, went up, came down, went up, came down, went up, coming down. So it should come all the way to this S1. So at 1 p.m. then we may see a bounce, and then at 1:30 p.m. we may see a drop again.
Thanks.
Yeah, Raj, do you have any question?
Yeah, hi, Kishore Garu. I recently joined like 2, 3 weeks ago. I'm relatively new to options trading. Also, I use IBKR as a brokerage, and I
Mm.
missed to buy the trade view. Um, I mean, I don't want to take any of your time from here. Is there any suggestions for me? Like that, what would be a good starting point?
Again, there are already videos where I explained about what are vertical spreads, what are bull puts, what are bear calls.
Is that
So
available in YouTube or a
yeah, they are
different?
in YouTube and also they are as part of that options channel. You can watch
Oh,
those videos so you will understand how to
okay,
enter or how to why what is the advantage with pull puts, bear calls, or what are a short iron fly, butterfly, all those strategies.
okay, okay,
Yeah, then yeah, IBKR is also a good platform you can use.
okay. Thank you.
Sure. Yeah, Suresh, please go ahead if you have any questions.
Hello. Hey, hi Kishore Garu. Good afternoon. So one question about the Allied Trading Fund. So for that, 1 day to pass, I'm gonna have to pay like $157. Is it right?
Oh, right, yeah, there is some add-on, but you can make the target and every day you can just open a micro for next 4 days. So yeah, if you don't want to take that add-on, for example, today you make the profit, you complete the
Uh-huh.
target, but next 4 days you just open a micro and close a micro. That's it.
Oh, that's it. So there is no rule like
Yeah, there
no
is
need
no
to like
consistency.
50% above, right? Usually the take profit trader is having that rule, right?
Right,
50%.
only take profit trader has that consistency in evaluation, but all other top firms they don't have any consistency rule in evaluation. Take
Oh,
profit trader has no consistency in the pro or pro plus. In pro you can do whatever you want, whereas other prop firms have consistency rule in the pro accounts.
okay, okay, sure. And one more question, Andy. So I took Apex and evaluation. So in our trading view, we can log in only with the trader weight, right? I would like to log in with Apex. Then how should I do the trading with Elite?
So that's what I explained you, right? You use Ninja Trader
Okay, Ninja
and
Trader.
then
Okay,
you give the credentials of that Elite Trader fund here.
okay,
And then here you can give the Apex credentials.
okay. Yeah,
So at the same time, you can do in two different accounts, right?
yeah.
In
We can do
Apex,
short, and in the
Apex,
other one is like buy.
yeah, yeah, you can do long in one, you can do short in one.
Okay. For the Ninja Trader, will this Elite trade? Because I saw like it is not allowing the trading view. I think I have to pay like extra $5 to activate that. Is that right?
In Elite Trader Fund, if you select Trading View as the option, then you don't need to pay anything.
But while I was creating, it was not showing. It's there in add-on. They're asking like $5 extra.
Did you select Trading View or did you select?
No, I didn't select the trading view. I select trade
Okay.
view, trader weight only.
Okay, yeah, if you select Trader Weight, then one thing you can do is you can use them as the child accounts.
Which account?
You can use them as child accounts
Child account. Okay.
and use any of the Apex account or something as the leader account.
Yeah, I'm doing that one in replicant. I did that Kishore Gar. But the thing is like, if I'm gonna lose one, I will lose other one as well, right? I wanted to play a game with one is long, one another one is short. Yes, I wanted to
Right.
keep.
Yeah, then if you're doing only one account each, then you can connect in. Yeah, you have to pay that $5, or you open another account and use Trading View, and then yeah, you don't need to pay that $5 or $10. So while selecting, you have to select
Okay.
Trading View. Then already your TraderWeight account will be connected to Trading View.
Okay. Got it.
Then only in Elite Trader Fund you have to use Trading View as the option, whereas in all other prop firms you have to use TraderWeight as the brokerage.
Okay. Nothing. So is there an offer going on with that take profit trader?
Yeah, they have that. Once you use that right choice code, so you get 30% discount now, and then whenever you complete the evaluation and get the payout, they will give you the amount whatever you paid initially. So for example, you are paying, let us say you are paying $230 for 150K account.
Mm.
If you complete that evaluation, and whenever you get the first payout, they will also refund your amount you paid. So that becomes completely free. You are not paying anything from evaluation to pro, and also whatever you paid to get the evaluation also they will refund you.
Is that for 1 day to pass or like I have to trade like 5 days? They're having like 50% rule, right? I
Right.
cannot use like
Yeah,
I
they
cannot
have,
use for day.
yeah, you can do 50%.
Okay, I can do only for 50%.
Yeah.
Got it.
If you make all 9,000, then you have to take some loss later. So to make it to 4,500. For example, you're copying and let us say you made 9,000 in all accounts.
Mm.
Then Apex Elite Trader Fund, you can just keep it like that. But for take profit trader, you will go and just take some 150 micros of NQ and just keep clicking buy, sell, buy, sell. So just with the commissions, your profit will get reduced.
Okay, understood.
Yeah, so SPX is dropping. Yes, also will drop. So your clouds are red, your T5 is red. So price went little bit up and again started dropping.
Yeah, but the clouds are not red here, right? It's just still converting to.
Yeah, but when candle is below the clouds, basically that means the colors are changing now. So overall it is
Correct.
choppy, right? So if it
Right,
is
right.
trend is there, then you will see big clouds. But when it is choppy, so since morning the clouds are very small. It went up, came down, went up, came down. So there is no proper trend. It is in a sideways market. So that's where we got the iron fly, or we got the. So initially we got bull puts, we took profits. When it went to the top, we got the bear calls, and you got the iron fly. So if it comes all the way to the 68.30, then you will make nice profits on the iron fly, short iron fly.
Correct.
Yeah, Ankit, please go ahead. Yeah, Ankit, do you have any question?
Yeah. So what happens is like I know we are taking you take usually more contracts, but when we take only one contract, when we close the thing, we get only 30-35% profit on this bull puts and all. But when we lose the 100%. So is there a strategy? I mean, we can. So at the end of the day, it's sometimes it shows in negative, right? Because when you say like 35% up, close it, or 40% up, close it. So we get, so out of 100, we'll get only $50-$60. But when we lose, we
Out of 8-9 trades, out of 10 trades, we win 8 trades. So in 8, you are making 40-40. That means 8 into 40, 320. Even 2 trades, you lose 100. Overall, you are 120 net.
okay.
So, or you just do the swing trades where you look at tag and turn 30 minutes, and then you don't even need to close. You can keep all 100%. So, for example, if you go to 30 minutes,
Mhm. But I don't have this tickers and all those things. All I follow is the option channel and whatever you ask to buy or sell. That's all.
right. So, whenever we give 5-day expiry, you can take those trades where you can hold them for complete. So, for example, now we got a bullish tag and turn. That means within next 5 days, price will be above this price. Then whatever
Okay.
bull puts you do here in next to 5 days, you can keep all those premiums. So now it might come down one more time, and then during the press conference, we may see a bounce.
Okay. So after the press conference, you think it's positive and it will go up,
Yet, as I
or you
told
can.
you, right, there are two chances. So if it happens, so that's what we look at. So before 1 p.m. itself, if it comes all the way to the bottom, then at
Okay.
1 p.m. we'll see a bounce. And during press conference, he may sound some hawkish or bearish. He may say that the future rate cuts are looking difficult. They may have to look for more data. They may have to wait for more time. Then we'll see a big drop.
Okay.
So 1 o'clock,
And
there will be a small move, but 1:30, once the press conference starts, the move will be much bigger in the opposite direction.
okay, and it will be positive, right? It will go up basically.
Yeah, if the initial move is bullish, the second move will be bearish. If the first
Okay.
move is bearish, so for example, if it comes all the way to the bottom,
Mhm.
then at 1 o'clock when the news release, it will go up. And then 1:30 when press conference starts, it will come all the way down.
Okay. And then we had one more call for ARE. Is there something which we can do because it went down a lot? It went to 45.
Expiry December 19th, or when is
No,
that?
I think it's this Friday. December 19th, sorry. Yeah. But it won't, I don't think it will recover till 55. We took around like one week back or something. Right, just kept on dropping since we bought it.
So, go to the FOMC. And then if you, as of now, we have Yeah, Prashant, please go ahead.
So, sorry, Kishore, probably you would have answered this multiple times already. I just joined late. So, I have a few Apex accounts and Elated accounts, and I'll be using Replicanto. So, the plan is at 1 o'clock, you will give us the direction for ES or NQ, whether it is up or down. So, you want us to keep two tabs, one for for long and one for short. So whichever direction it averts, we just go and execute it.
You're right. Yeah, I'll around 12:57. I'll tell you whether to go long or short. So if you don't want to take risk, then you will take two tabs and do both the sides. If you are okay to take the risk, then you will just go based on if it is already at the bottom at 1 p.m. Then we'll take long.
Okay, so is that allowed to keep trade weight on two different tabs? And execution is will be only one tab. That still we
No,
can do that, right? Or no?
you use Ninja Trader in one tab and you use Trader Weight in one tab.
Okay, okay.
So even though Ninja Trader also you can use your Trader Weight accounts. So you can connect to Trader Weight. So if you have Apex and Light Trader Fund or Apex and Take Profit, in one you use Trader Weight and connect to Apex. In one you use uh, some other prop firm. Or if you have 20 accounts, 10 accounts you connect using this, 10 accounts you connect using the other one.
Okay, okay. So I have like 5 accounts or something. So I'm just using Replicanto and I'll just use one tab and should be able to take risk and do a long or short.
Right.
Okay, thank you.
Sure.
Kishore, earlier you suggested me Alta, right? Alta dropped huge last month. I made good profit. I sold them. Yeah.
Nice.
Yeah, only I'm holding. I sold all the stocks with profits last 1 month.
Okay, only
So
TTD is the pending one, right?
traded also averaged actually. I added more stocks. I'm anticipating at least $3 to $4 also okay to me. But
Okay,
I
what
will
is
wait.
pending? What is
Now
pending?
mine is I will tell you 1 second. Average is 39.47. My average. It is trading 39.19 now. It will. I will best. I will hold until 15 to 20 days. That will be good, right, Kishore garu?
Yes, yeah. So what else is pending now?
TTD only TTD holding. Remaining all are Adobe, UNH, Alta, and all are I sold with profits. Only TTD. Next,
Okay.
earlier you said it is reached 55. It can happen, Kishore, soon.
Yeah, if there is any positive news, yeah, it can move to 55.
Okay, until earning maybe it will happen, right?
Right, yeah.
Yeah,
Yeah,
I'm
we'll
not
wait.
buying anything right now. I'm waiting for right time now. Maybe this week, maybe to keep
Mhm.
in capital holding.
Yeah.
Yeah, we'll get good chances next week, Kishore garu.
Yes, yeah, with earnings, we'll see a nice move because it is consolidating since long time.
Yeah, yeah.
Yeah. Yes, Sunil,
Can
please
you
go
help
ahead.
me check TTD?
Yeah,
Is it
start
possible?
reactive TTD.
Daily, Kishore garu? Only that only.
So you have resistance at 40 as of now. Just enter. So now you are at a support. It breaks 39, then 40.4 is the target. 41.2, it can go to 41.2 before we'll see a bearish target turn again.
Okay. Okay, that's good. I have almost 700 stocks actually at 120.
Yeah, it should
Okay.
go all the way to 41 point. Yeah, so please go ahead.
Yeah. So with the news, how
Kishore garu, last question. Nowadays, Q&A sessions are not being conducting. It will continue, or are you planning to stop anything?
Yeah, and I came to India, so that's where, yeah, there were some
You are
sessions.
in
But
India?
yesterday also, yeah, I'm in India until Jan first week. But yeah, yesterday also we had nearly 2-3 hours Q&A session. Maybe you might have not joined, but
Oh, I didn't know. Some days I'm joining, some days I'm not. That is okay. Okay, that's
mm,
okay. Thank you. Thank you.
sure.
okay, Kishore garu, with the news that with the conference we have, typically what will be the impact on the metals?
Generally,
Like, and now silver, yeah,
metals also should look at
like
silver.
silver right now. Silver was a buy in the morning. I kind of entered late. I'm just holding it, but in
Got a
30
very
uh,
staggered turn and then it dropped.
correct.
GC also same thing. Right? Last night we discussed they were at the top,
But
so
yeah,
we
but
saw a
gold has
nice.
a
So mostly
bullish
if
back.
ES and NQ drops, then the metals may go up.
Got it. Okay.
So it will be generally opposite.
Opposite. Okay. By mistake, I had one trade at 61 for silver. I'm like,
Right. But you already have tag and turn, right? Always better if you want
yeah,
to do
yeah,
in
yeah, yeah.
personal accounts, always just look in 30 minutes. If you are
30
in a
minutes.
bearish tag and turn, better you short it.
Yes. No, it was a wrong trade that happened by mistake on silver. So I'm debating should I take the $900 loss I have or just give it some more time just for it to recover.
Ishwar, actually, I opened the two tabs. Tab one with trader weight and tab two open with the Ninja trader connected to the line. When I can use the two accounts after the 1 p.m., right? When you given that one, that way I can pass the two accounts at the same time.
Right.
Okay.
So yeah, I'm taking profits on ES short. There is a nice drop here with ES.
Another question, Cracker Barrel, can we enter that right now too? Because it looks the same.
Mm, yeah, you can still enter 27.5 and 30 bull puts for 19th December. So as of now, it is somewhere in middle, 1255, around 1258. It may come all the way to the bottom. Your SPX bear calls are in nice profits. You can take gains with SPX bear calls. Also do one more thing. We can wait at 1 o'clock move. Based on that, once conference starts, generally we'll see a big move in the opposite direction. Because now, as of now, it is somewhere in between. It is not at the bottom. So we may see further drop, but it is also close to the support. We'll see a drop and then it will bounce. Yeah, silver, SPX, they went up and it came all the way to the bottom. Once press conference starts, we should see a drop. Personally, you can take profits on silver. This came to the bottom. Usually there was a 100-point jump at that once they release the news. So once conference starts, we'll see a drop all the way to the bottom. So before the meeting, we can open some puts or we can do some SPX bear calls. They will make profits again. On the RN5 also, we can take profits on the put side before the conference. So your put side will make nice profits now because it went all the way up. Again, when conference starts, it will drop all the way. Then we can take profits on the call side.
Did we close Cracker Barrel?
No, I'm still holding. This press conference starts, we'll see it again dropping all the way. We should see a bearish. Tomorrow's date I can do bear calls. 68, 75, 68, 80. You collect, you can collect around $240. So 68, 75, 68, 80.
It gives me 390 create, $390 create for the 6870 and 6880.
Yeah, it is 68, 75, 68, 80.
Oh, 75. Okay.
Yeah,
This is a
75.
bear call, right?
Right.
Yeah, now it came down. Yeah, $180 now. Okay.
Could you repeat it again? 68, 70?
75 and 80. 68, 75. Sell 68, 75 and buy 68, 80.
220, right? Yeah, got it. Also, another question, SPX, we don't get assigned, right?
Yeah, there is no assignment for SPX. That is the advantage. Now it should drop all the way to the bottom. So I can also get for today, but yeah, risk is less if I get for tomorrow. Then it is very, very low risk trade. You can keep all 100% if I get for tomorrow's trade. Once the conference starts, we should see all the way to the bottom. So,
Also, sorry, last question. When you say keep, that means we should let it expire, right?
right here.
To
So
an
I took
easier
it.
way to pay your bills.
I
With
took a short
AT&T
on
Split
the
Pay, you can automatically notify.
yeah, just I took for one for now. In 5 minutes, we got a bearish target turn. So once the conference starts, it should go all the way to the bottom. Missed this. I should have. In 30 minutes also, we had a bullish target turn. Went all the way outside. So I'm taking two-year short. So if anyone want, they can buy SQQ stocks. You should see nice bounce on SQQ.
Kishore, are we going to take the trade now?
No, we'll just have 2 years short because the meeting as he speaks, right, for news event, just there will be sudden bounce, but for the conference, just we can hold this 2 years short. So once it drops 50, 60 points, then we'll make $3,000-4,000.
Okay.
Yeah, we missed that. My timing was wrong here. We missed that bounce. We should have taken that long position. But yeah, now we can hold a year short. And then during the conference, we should see minimum 30, 40 points drop all the way to S1 or S2.
Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 0.75 percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it's partly that consumer spending has held up. It's been resilient, and it to another degree it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive, and as I mentioned, AI spending will continue. The consumer continues to spend, so it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have. If you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment and the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of a big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that's certainly the implication.
Thank you. Colby Smith with the New York Times. Today's decision was clearly very divided. It wasn't just the two official dissents against the cut, but there were also soft dissents from four others. And I'm just wondering if this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our two goals are a bit in tension, right? So, interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you ultimately where do you think the bigger risk is, and it's very unusual to have persistent tension between the two parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and we come together and we reach a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey, we're gonna look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. You talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I could make that case. It's a close call. We have to make decisions, and we always hope that the data will give us a clear read. But in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did two discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set. But you are right about those 3 cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire.
Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic, heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things. And we say that this was a decision to make. It obviously wasn't unanimous, but overall, that was the judgment that we made, and that's the action we took.
Just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant, as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20-25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators. It's before the courts, and we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan though.
No, thanks. I don't know if that means I get three questions, but
no, just one more.
I guess I wanted to come back to the 1990s question, and do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our two goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, our framework, as you know, says that when that's the case, that we try to take a balanced approach to the two things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really, but it just tells you you've got to. And I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral, because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say, and that's what we're doing now. It so happened that we've cut 3 times. That we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, it takes, there's the announcement of a tariff, and then there's, they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant there. And the president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Mike.
No mulligans for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the real economy and focusing on that. And you've got to, when the long bonds move around, you've got to look at why they're moving around. If you look at inflation compensation, it's very, that's one part of it is inflation compensation break-evens. And, they're at very comfortable levels. They're at levels consistent. Once you get out past the very short term now, break-evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation, as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher. It's positive, significantly positive. So nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages, so that people are earning enough money and feeling economically healthy again.
Victoria.
Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year, and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2%, because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and we're well aware that this is a story at this point, is that if you get away from tariffs, inflation is in the low 2s, right? So it's really tariffs that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. We didn't have to worry about inflation. Sorry about the labor market, because the labor market unemployment was very low. If you remember, when inflation was very high, there was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks to both, and I think we're doing the best we can for people. They also care about their jobs. They do care about affordability, and the best thing we can do there is both to support economic activity, but also, make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody. They have a survey. And there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And so there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20, and that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way. That's demand. Labor supply has also come down quite sharply. So, if you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, pushing down on job creation with our policy.
When we're talking about supply, we have seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story. It's not a big part of the story yet. We don't know whether it will be. But, for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low. If there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up. It really haven't much, so it's a little bit curious. But longer term, though, the question is, what are we going to see here? And we don't know, but it's it may be that in past really significant technology innovation eras, you have seen some jobs destroyed and other jobs made. Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different. It's every time we have a wave of technology, we think, oh, this could put a lot of people out of work. What are they going to do? In the past, there's always been more work and higher productivity, and incomes have risen. What will happen here, we're going to have to see. But right now is such early days. We don't think we see much. It's certainly not showing up in layoffs yet.
Thank you, Chair. Enda Curran, Bloomberg News. Given the breadth of views on the policy committee, why is there such a division of views between
the policy what? On
the committee?
Thank you.
Why is there such a division of views between the presidents and the board members?
It's not so stark as that. The views are more varied in each group as well. There's some of that, but I would say they're also governors and they're people on both sides in both groups. I wouldn't put too much in that.
Okay, and just to follow up, please, given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
Christine. Thank you.
Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people more at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a price stability and a strong labor market. What we saw, for example, at the end of the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record.
Yeah, so the housing market faces some really significant challenges. And I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people. Housing supply is low. Many people have very, very low rate mortgages from the pandemic period, and they kept refinancing and caught the really low. So it's made it expensive for them to move. And, we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time. And so a lot of estimates suggest that we just need more housing of different kinds. So housing is going to be a problem. And really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address, a secular housing shortage, a structural housing shortage.
Chris.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are the inflation risks? It looks like inflation is cooling, in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, we see higher inflation. As I mentioned, most of the inflation over target is from goods. And we estimate, we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? That's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you see that. I think the other possibility is less likely, and that is just that the labor market gets tight or the economy gets tight, and you see just traditional inflation. I don't see that as particularly likely. But so I think again all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
Hi, Chair Powell. Neil Irwin with Axios. So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had 5-6 years of 2% productivity growth. This is higher. This is definitely higher, and it was before it could be attributed to AI. I also think if you look at what AI can do, and if you use it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs, though. So it could have productivity implications while also having, social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. The pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy in really good shape. That's what I want to do. I want inflation to be under control, coming back down to 2%, and I want the labor market to be strong. That's what I want. And all of my efforts are to get to that place. They have been all along, but ultimately, that's what I'm. And it's I don't have time to think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Chairman Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage or an unintended consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time, we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all the people we serve. When we raise rates to bring inflation down, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand that. I think what people are feeling is the effect of higher prices. There was a global wave. Sort of every large economy in the world, every large open economy, market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and people are innovative, they work hard, and so we're all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
Should we be holding our shorts?
Yeah, we should see a drop now. Yeah. I'm getting 6900, 6910 bear call for today. Which you can get it for tomorrow and also for today. For today, it is just $200. is nearly 80% on today's 6900, 6910.
Should we close that call?
Today's one,
Yes.
mostly it will stay below 6900, but yeah, if you want, you can take profits. If you don't want to take risk.
Also, will ES continue to fall down?
Yeah, it will drop because it came all the way to the top in 30 minutes also. We got very stagnant. So that's why we got the bear calls for tomorrow. Yeah, yes, also should drop.
Would we be collecting the whole $500 for tomorrow too?
Yes, yeah. It's 75-80 bear call, which we got for tomorrow also. We'll make nice profits tomorrow.
Yeah, Kishore Garu, I missed to close the bear call 68.55, 68.60 bear call. Can I roll over?
55 and 60. Yeah, you can roll over to Friday.
Friday, okay.
What does rollover actually mean?
It means basically you're closing for today's date and opening for a future date.
Okay, so that means you're taking a loss and then you're opening another contract for the next day, right?
Right, but basically you won't pay the commissions and other things when you do that, when you roll over.
Oh,
And also if overnight, if there is a drop, then you're making profits by tomorrow.
got it. Also, could you also explain this bear TNT? Do we take the bear calls whenever we see the dot, or whenever we get the alert on our phone?
You got a bear and also you got a red dot. So both you
Okay.
got a confluence.
What are these two dots at the side of that? The bear TNT.
And that is like a resistance.
Oh,
If
okay.
the price is below this, it's a strong resistance. So it said like, right, that is the bearish reversal zone, 68.98. When it touched it, immediately it started dropping.
Got it.
And short butterfly, can we move to the next week? 10:30.
That one is only 300.
Yes, 300. Yes, correct.
Yeah, we can, or you can just yeah, let it expire.
Okay, sure. Thank you.
We should have actually closed before the meeting. We missed closing it. Exactly, because it came to 68.37 or something before 1 p.m. We should have closed it.
I bought myself 55.60. Can I roll it tomorrow?
Better Friday is better rather than tomorrow.
But
You will
still,
come.
they're asking a debit. Is it okay to go with the debit?
No, that's why for Friday, are you not getting credit? Friday,
Um,
you'll have more premium.
no, Friday also debit is $1, not credit. This is I bought myself, not from your alerts. Like I just doing by analysis of that one. I bought 55 and 60 bear calls.
Yeah, you can do it for tomorrow or for Friday. Friday is more or less risky.
Okay. Okay, that's on not allowing. Okay. Exchange that one. What is the message? This auto may result in oversold positions. Okay. Thank you.
And tomorrow's bear calls are also nice profits. But yeah, we can hold until tomorrow. Tomorrow's made nearly 20%.
When should we close the ES short?
Yeah, we can wait until 3:45 and then close.
No, Kishore, you did not tell that one. You have to do the short on the prop forms. Can we do it now, or what is the plan on that?
If you did not take it, yeah, you can ignore it. We missed actually. Yeah, that 1 o'clock was where the bounce was. We missed taking it. So.
Or did you say, or you did not say?
No, I did not say I missed it. Yeah. I will-
Thank you. Then we can next time we can make it that use. Okay.
yeah.
We'll have night session also, right, for pop firms?
Yes.
Kishore, in personal account, can we short ES? Keep it.
Yeah, we can. Yeah. We'll see a drop overnight.
So overnight, yes, can we expect it to go all the way to 68.50 sometime today? Or
Yes,
68.43?
68, 60 is possible. It will come, yes, should come all the way to around 68.40. Ripple is dropping back in Q and booking profits. So Ripple is dropping most of the softwares, CRM, Workday, all of them also we may see a drop.
The developer or program.
Whatever bear calls we got for tomorrow, all of them should make nice profits. Yeah, Deepan, please go ahead. Do you have any questions?
I'm sorry, I don't have any more questions. You answered it. Thank you.
Yeah, Taran, please go ahead.
Yeah, Kishore. So I have taken short on SPX. I think the market reversed, so I'm still holding it. Is it a good thing to hold or what to do? I'm right now 1200 down. It's in my personal account.
You mean ES short or
No, SPX.
SPX? You bought the puts for tomorrow or which expiry?
Yeah, for tomorrow.
Did you buy the puts or bear calls?
No, I bought puts.
Which strike?
Hold on. My strike price is 6825.
Oh, 6825.
Yeah.
6825 might be a little difficult, but to go 60, 70 points down tomorrow. It may go 30 points. It may go till 6850, but 6825 might be better. You convert it to bull put tomorrow morning. You just go and sell 6830 or 6835 something. So whenever it stays above 6835, then you can keep all the money. So now because you already sold one, you go little bit above and you sell a higher strike put. So your put will become bull put.
How do I do that? Sorry, I have not done that before.
Just you go and sell 6835 put because you already bought 6825. It will allow you to sell a 6835 put. And then you will collect the premium.
Okay. You're saying 6835, right? Sell
Yeah.
6835?
Yeah, because you bought 6825 put. If you sell 6835, yeah, that will turn put will turn into bull put. So if SPX stays above 6835, then all that premium you can keep it.
26 agent blazer status.
Okay. For tomorrow's expiry, is it still good to take another shot on SPX, a fresh one?
When we took that bear call, you would have taken 6900 or something when we got a bear tag and turn. So at this point, if you would have got 6900, then tomorrow the 6900 put will make nice profits.
I still see that 6900 is at 2660. Is it still a good price to take that? I'm talking about put.
Yeah, you can take it. Yeah. It will see a drop. Or you, if you want low risk, you do a bear call. You do 69, 6905 or 6905, 6915. Then you can keep all that money. So your risk will be very, very minimal, even if it stays choppy or if it drops or even if it goes 5, 10 points up also. By tomorrow morning, you will make nice profits.
Got it. Okay.
We have a 6875 call also, which we took. Anything about that?
6875 call.
Yeah.
Call or bear?
No, I think we took a bear call. Bull call. Bear call, sorry.
Yeah, we are holding for tomorrow. We are holding those both 69, 6910 and 6875. Those two bear calls. So tomorrow morning we should see coming all the way to 6864. It will
Sure.
come minimum till the midpoint.
Got it. So FOMC call, everything happened positive on it, right? Like there was no negative news.
Right, yeah, he answered everything positively. So here there was a drop, but yeah, immediately it bounced back. Maybe we should have. Yeah, T5 was green. Yeah, it was positive. Generally, in his conference, 90-95% of the time, initially, if it is a bullish, We'll generally see a big drop during this meeting. He'll be generally bearish, will be little negative in the meeting, but today his answers were, he was more happy. Or, yeah. There was nothing against Trump or anything. So, because of this, it came touching the midpoint and then bounced back. Yeah, Ankit, please go ahead. Any questions?
Hey, Kishore. Any,
Yeah.
what's your take on silver and gold? Before the FOMC, it was down, and then now it seems to be at R8 levels already.
So yeah, we should again overnight we'll see a drop in 30 minutes and in 5 minutes. Both it is we got a bearish tag and turn in both. So tonight we'll see a drop on.
Is it a good idea? Okay.
Yeah, for
is it a good
personal
idea
account.
to?
Mhm. If it is
For
a personal account, we can short. Yeah. You can take a
And
short.
what would be the bottom line for this too?
So
For the
42,
next 2 to
42 15 is the target. GC will touch
for
42 15.
gold.
So why are we taking a bear call
And
here when the T5 indicator did not show anything?
No, for personal account, right? Even it may do a double top, but it will drop.
Got it.
It's okay
and
for
what would be the
personal.
bottom line?
So 42 15 is the target. 42 15.7.
Yeah, and for silver,
Silver. Silver, as of now, we don't have the tag and turn it. So better to wait for silver to short.
okay. Thank you, Kishore. That's all.
Sure. And GC is we got a bearish tag and turn. Yeah, Vishal, please go ahead.
So I took that short, ES short in my personal account. Did you say we can hold it? You mentioned we need to close it. Was it for, I'm assuming it was for prop only, and we can hold it
Right,
in my personal.
right, yeah. If it is prop, we have to close before 4 p.m. Central. But if it is
Yeah, it's
personal,
in my personal account, so I can hold it for until tonight.
you can hold, yeah. If you have a good account, you can hold as long as you want until December expiry, which is another 2 weeks. So until the time you can hold.
Okay. When you
Because
say good account, what do you?
no, that means do you have 15-20,000 in your account, or is it just a $3,000-4,000 or something?
No, no, I have the balance. Yeah.
Yeah, as long as you have a buffer, then you can hold it until that contract expires.
So when the day closes, will there be like some kind of a margin call here, or?
Yeah, for example, let us say if you have only $5,000 in your account
Mhm.
and you shorted ES
Yeah.
and it went against to our direction, then
Mhm.
the brokerage may close your trade because you have only 5,000 and they feel like if ES may suddenly go up or something. So that's why they will automatically close your trade. But if you have $15,000-20,000, then they won't.
Yeah, I have the balance. My question was if I, let's say if I keep it for 2-3 days, will there be like a margin call or account something for every day it's trade is in not in a
You
direction, or it does?
you took only one contract, right?
Two,
Or
two
you took
contracts. Two contracts.
So that depends on your account size. For example, if your account is $40,000, $50,000, then there won't be any margin call or anything.
Got it. Okay.
But if your account is only 10, 15,000, you are right, because ES is like around $7,000.
Mm-hmm.
So 7 plus 7, 14. So if your account is only 10,000 and that is dropping, you thought short, but it is going up, then they can automatically close it.
Gotcha. And do you expect it to fall overnight?
Yeah, because yeah, both ES and Q in 30 minutes they are at the top, in 5 minutes they are at the top. So we should see minimum 30, 40 point drop in the evening session.
Okay, great. Thank you very much.
GC is already dropping.
Order filled.
Yeah, please go ahead.
Okay, sure. You were just saying that overnight margin requirement for ES is around $7,000, right? So which brokerage are you talking about?
Again, right? If you have NinjaTrader, TraderWeight, Tradify, all those will give you good margins. But if you have IBKR, then they need a bigger margin or they need a bigger account size. But if you have
Okay.
Tradify or TraderWeight or NinjaTrader personal accounts, then even if you have 10,000, 15,000, that is good enough to short 2 years contracts.
Oh, okay. Because I had trader weight and intraday margin is only 500 for ES, but overnight is more than 20,000 to hold one contract of ES.
Which brokerage you have?
Trader weight.
No, you don't need that much.
Okay.
You talk to the customer support.
Okay. Okay. Yeah, I just wanted to confirm. So you were saying trader weight is like around $7,000 is sufficient?
Right.
Got it. Okay. Thank you.
Sure. Yeah, Fremont, please go ahead.
Hi, sorry, this is Vijay. That 6810, 6850, that is at loss, right?
You mean that, yeah, Ironfly is low. We collected 1,700 on a 20 point spread. So that is like $300 loss.
Got it. Okay.
That's not, yeah, we should have closed before that 1 o'clock because it came all the way, it went up and again came back to 68.37. At that time, we should have closed, but yeah, we held on to it because the risk is only 300. Reward is if it closes around 68. If it would have dropped, we would have made 1,700 on that. So we held on to that.
Got it.
But yeah,
Thanks.
we took that iron condor, short iron condor between 6820, 6900. That is $600 per each contract. That one we 100%.
All right. I actually only took the first one. I didn't take the second one, but I have one bear call for tomorrow. Hopefully that will cover something.
Yeah.
So tomorrow till what is the expected drop? I mean, it'll drop in the morning and it'll stay, or it'll like drop when it opens and then go up again.
It will drop to minimum, if you see 30 minutes or minimum, it will come all the way to 68, 64, 60, 68, 60. If it breaks, that is the midpoint. If it breaks this midpoint, then 68.30 is the next target.
Okay, but the trend is bearish.
Yeah, because it is overbought now. So in 5 minutes and 30 minutes, we are at the top. 30 also it went all the way up. So in 30 you are bearish, in 5 minutes you are bearish. So we'll see a nice drop.
Okay, got it.
Access topics and actions without authenticating who the agent is talking to. It can be
All right. Thanks a lot.
Sure. Yeah.
Private actions are private and require authentication. Every organization has different requirements for authentication. For example, a healthcare company might require authentication before most of the agent's topics or actions can be accessed, but a car dealership's agent might not have any authentication. Actions. Definition. Examples. Public. Public actions are actions that an agent can take that do not require authentication.
Another question, when we have like bear calls or bull puts on stocks, and we don't have enough money in our account, the brokerage, like there's no damage to us, right? Because the minimum loss is already covered because they take a collateral.
Right.
So can anything go wrong at any time, like, or is it always covered?
Personal information. Processing payments or purchases.
Generally,
Like sometimes
yeah,
what happens I've seen is I get early assigned for one of the side legs and then the other leg is not.
CloudKicks is a manufacturer of stylish and
yeah, that is the only risk. Sometimes they can assign the stocks, and suddenly if that stock drops overnight or something, once they assign and it goes in a opposite direction, that is the only risk.
the company wants to add
Right.
case
So
Okay, but
while
wouldn't the
taking that,
other leg cover the losses?
verify its customer's identity whenever a customer inquires about anything.
so again, it depends, right? For example,
Force admin for CloudKicks.
let us say you got a bull put, right? Let us say you got bull put for SPX, or let us say for SPY.
Customer inquires about their case status.
So they will assign the stocks to you because SPY went up.
Customers for their email.
So one leg will close completely zero, and the other leg they will assign the stocks to you at a lower price.
Management topic. Once the customer is verified, the verification code matches.
Right? You
I'm sorry,
sold
could
the
you
put.
repeat that again?
Note.
So let us say you did a SPY bull put.
Not verified and is
Okay.
engaged in a messaging session on the CloudKicks
So because
experience
you
site.
did a SPY bull put, so one leg it made profits. Then there is another leg where
First,
you have a bear call, right? Or you sold a put and you bought a put.
sign up for a developer edition or for
So whatever you sold, they will give the credit, and whatever you bought a put, let us say they assign the stocks to you. On one of the legs, they assign the stock to you,
complete the challenges in this
and
batch.
suddenly overnight, SPY dropped big.
Edition is designed to work with
Right.
So that is where you will have the risk, right? One leg is completely closed, but one leg you got the assignment of the stocks.
So that's why SPX is the best because nothing will happen for SPX.
Right. Yeah, that is the advantage with SPX or XSP, where there is no such assignment. You don't have that risk of assignment, and if you have both the legs, then you are covered. But if they close one leg and just assign only one leg, and suddenly if something happens, that is where we have a bigger risk.
Interesting. Okay, thanks. But we don't have to worry about SPX. I just wanted to double check.
Right. Yeah. SPX, just yeah, whether you make profit or loss, that is done by 3 p.m. That will be decided for the day. Even if you have tomorrow or next week, whatever it is, never there will be any assignment. It is always cash settled.
Got it. Okay, thank you. Thanks a lot.
Okay, Bhuvan, if there are no other questions, I'll wait until 3:45, 3:50, and then close ES and GC. GC also should drop a little more. ES also we should see some more drop, and then yeah, again I will connect back at 8:15 p.m. Central. Maybe.